Hi everyone, Brian Swendsen with Residential Lending. Happy fall to all of you. I'm so excited for cooler weather. I don't know about you guys, but the constant 90 plus degree days were just getting to me. I'm so happy to have cooler weather now. And just around the corner is Halloween. It's probably one of my favorite holidays of the whole year. It's so much fun, all the ghosts and goblins. It's fun to kind of get scared, to get you jumped up, but there are some scary things actually happening in the mortgage market that I wanted to make sure you guys are aware of. Some spooky stuff coming out. So the Federal Reserve, which is the basically the kind of the government's fiscal policy chair. They basically help set long and short interest rates. They met last week. The Federal Reserve chairman, Jerome Powell, he's a scary guy. He basically said, hey, the government's been buying mortgage bonds for the last 18 months, pretty much since the pandemic began, and it's helped keep interest rates really low, which is good. Good for you as a consumer. It's been a great time to buy a house. It's been a great time to refinance. Obviously, interest rates have been historically low. That's perfect. That's all good news. Now, when Federal Reserve Chair Jerome Powell said, guess what? I think we're going to start tapering and buying off mortgage-backed securities or mortgage bonds. That's a scary thing, because what that means now is these mortgage bonds, which have had a huge buyer, i.e. the federal government, say we're not going to buy as much anymore. Now these bonds have to look for other customers, private investors, and those private investors are going to ask for probably higher yields or better returns. So in order for that to work, the interest rate on those bonds has to go up. So what that means is if mortgage rates were low these last 18 months, we're probably at the tail end of it. It's going to start climbing up. The Federal Reserve has already said they're going to taper off in buying it. And that's a scary thing to think about when it comes to interest rates. In fact, when they met last week, right after the meeting ended, interest rates shot up almost a full 0.25%. So everyone knows it's going to happen. We've probably got another month or so before they meet again. They're going to meet again in November, and they're going to give us a better idea of what that long-term plan is going to be. But all indications are that interest rates are going to start climbing up. So if you're in that spot right now where you're thinking, I'd love to take some cash out of my house maybe for renovation, or maybe even buying a second home as an investment property, or you're looking to move or shorten your term, or get rid of mortgage insurance. There's many reasons to maybe look at a refinance. Give me a call. Let's look at it, see if the scenario makes sense for you. It doesn't mean that interest rates aren't still going to be low for the next little while, but it means that interest rates are going to start climbing up. So now's a really good time to look at it. If you have any questions, if you want to have me take a look at it, let me know, and we can talk about it together. Happy Halloween.